Hi guys, this is Ruby with MRV Financial. Thank you so much for joining us today on this beautiful monthly for our topic of the week. As always, please don't forget to follow us on YouTube, Facebook, Spotify, and Anchor. For today's topic of the week, it's going to be I'm ready to buy a home. I did my taxes, I got my down payment. Now, what else do I need to do? I have our awesome friend here, Denise Portillo-Krohn with Midwest Equity Mortgage, and she's going to school us on what it is that we need. Denise has been a loan officer for over 10 years, so this is a very trusted source that we have here. Denise, some questions that I have that I think, most of my clients ask me at our meetings. From a personal perspective, I got everything else that I just said. What do they need to bring to you?
Well, first of all, thank you, Ruby, for having me. It's very exciting to be here and sharing with your followers. So this is a time of year a lot of people are thinking about buying a house. It's a fresh start, right? We're starting our year off with big goals, and buying a house is usually one of the biggest ones that we have as Americans. If you have completed your tax returns, maybe you have a little extra cash and you're thinking, okay, I'm ready to take that next step. What do I have to do? So when I'm meeting with a person, if it's just an individual W-2 salary person, it depends if you're going to just do a pre-approval. If you know that, I just want to go out and see what I'm going to get pre-approved for, and I don't have an exact house in mind, I'm going to get all your documentation and I'm going to qualify you just to let you know what your maximum amount is that you're allowed. So I will usually ask for your W-2s, your last two full tax returns, so all of the pages. Usually a bank statement for whatever deposit you're going to be using, whatever account, and usually 2 pay stubs. So that's on the personal side of things. For those self-employed borrowers.
I love it. You're always talking about us, guys.
Yes. So for those of you also, big goals, right? The process is a little bit different. We underwriters like to scrutinize a little bit more closely, so we want to make sure that you're well prepared, that everything is in order, because we want it to be seamless. So typically for self-employed borrowers, we're looking at 2 full year tax returns. Now, I am going to ask for your personal business tax returns. I'm going to ask for your personal tax returns. So make sure you're working closely with your accountant to make sure everything is in order. Now, I do want to address something that we run into with self-employed borrowers. A lot of times, I understand, lenders understand that you have a lot of expenses, and those are legitimate expenses. But when you have a goal in mind to buy a home, you have to be a little more conservative than you normally might be. So you want to make sure that you are showing some good earnings that are going to offset the cost of a mortgage. And so you want to make sure that, you have that, and that it makes sense, to an underwriter who's looking at your file.
Yeah, give me an example. What have you seen? I know what I've seen.
So I've seen a lot of things over the years, but sometimes people will come to me and say, oh yeah, I make our business is so profitable. We make a ton of money. I have so many transactions and it's wonderful. But when I get their tax returns, they made $5,000, profit for the year, and I just can't work with that. A lender's just not going to find that acceptable, because they're going to say, okay, well, how much money do you have after your expenses to apply towards a mortgage payment? So that's what we want to show them, that you have, enough to offset your mortgage and all your other debt, and that you're still going to be secure in your finances.
Yeah, so this is what we're talking about, those losses, to make sure that you have, your 5-year plan in front of you, your 3-year plan in front of you, because they're going to look at your last 2 years. So if in the next 2-3 years you're planning to buy a home, this will be the time to say, okay, what makes sense this year? Should I really be taking those losses, or, what other options do you have? This is when you will talk to your accountant and say, hey, what options do I really have from a book, perspective? From a lending perspective, there's not really many options, because what they look at is you made this much, but you walked away with this much because you spent this much here. So if you're not walking away with much, they're going to multiply that times 3. And they're going to say, this is how much you actually qualify for. Am I correct?
Yeah, that's a good rule of thumb. I mean, usually underwriters are looking at anywhere from 45 to 55 max combined debt. So you want to make sure you have enough to show that, you know, your earnings are going to cover all of that and all of your debt.
Okay, I think we covered everything for today.
Okay.
Thank you so much for joining us today, Miss Denise.
I appreciate it.
As always, this is Ruby with MRB Financial. Thank you so much for joining us today on this beautiful monthly. Please don't forget to like, follow us, subscribe to our medias, and please share with your family as we do look forward to add value to your financial house. Thank you and have a beautiful monthly. Bye-bye.
Bye.